This is Business Weekend with Ross Greenwood.
Hi there and welcome to Business Weekend. I'm Ross Greenwood. It's my first Business Weekend for 2025 and it's great to have your company. Coming up on the program today, the first week of Donald Trump's presidency brings a range of potential pain points and opportunities for Australia. From a possible double taxing of Australian citizens and companies in America, a demand for a massive increase in our defence budget, to the opportunity from the coming boom in artificial intelligence. We'll cover it all for you today. Now, the AI boom is something every person in business has just got to get their head around. To help understand the possibilities, we'll speak with the founding director of Australia's largest machine learning research group, Professor Anton van den Hengel.
We can't continue to have big bits of our economy taken over by foreign multinationals. We have to get in there and participate in this modern economy.
But the downside might be rubbing Donald Trump or his allies up the wrong way. And that's potentially what our news bargaining code, which forces US tech companies to pay local publishers, could do. The penalty if the US takes umbrage is a doubling in the tax rate for Australian companies and citizens based in America. And what happens next if the Star Casino Group collapses? Its finances right now, well, they're precarious. Its trading is poor, but even the state governments will be hurt if that company falls over.
If you take a look at how the landscape for casinos has shifted over the last few years, they're probably never going to be the lucrative businesses they once were.
We also speak with the long-term chief executive and chief brewer of the Coopers Brewing Company. That's Tim Cooper, who said this week, after more than 2 decades, he's standing down.
We've also been described as being the grandfather of craft because, of course, we're 163 years this year, so we've been around for a long time.
But look, let's start with Donald Trump. How can we not? It's clear Trump's 4-year term has the potential to revolutionise the global and American economies. And he hit the ground running with more than 80 executive orders signed immediately after his inauguration. Now, the bottom line is that Trump wants America's economy to grow faster. He wants America to make more things. He wants American exports to balance out what he sees as unfair trade arrangements.
You'd put a universal tariff on anybody doing business in the United States because they're coming in and they're stealing our wealth, they're stealing our jobs, they're stealing our companies, they're hurting our companies.
Now, to do that, he's prepared to do many things like tariffs, which naturally push up the price of goods. So that normally would mean inflation. Now, to try and offset that, he's pushing the Saudi Arabians to cut the oil price.
I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war.
And though Foreign Minister Penny Wong and also the Ambassador to the US, Kevin Rudd, were pressing Australia's case in America this week, you do sense many in government hope we'll simply slip below Donald Trump's radar, that he won't. That's the problem, because Donald Trump has a long memory.
We have a deficit with almost, not all, there are a couple, I won't tell you their names because I don't want them to find out about it because they'll feel stupid. But there are a couple of countries that actually don't make money with us.
Now, Australia is one of those countries, but is that and our long-term military alliance with America enough to prevent punitive tariffs or taxes on our goods or companies? Probably not, and that's because of extra taxes that we've imposed on US tech companies like the News Bargaining Code and policies to make the likes of Google, Amazon and Meta pay more tax here in Australia. One of the executive orders that Trump signed this week suspends US participation in the so-called global tax deal, which Australia played a key role in creating. And that deal sets a minimum corporate tax rate globally to prevent multinationals avoiding their taxes altogether. But just look at all the tech company CEOs and founders at this week's inauguration. Do you imagine for a moment they won't let the president know what the Australian government's doing? Wait and watch this space. But we're going to start the program with artificial intelligence and that massive $500 billion Stargate announcement by Donald Trump alongside Oracle founder Larry Ellison, SoftBank chief executive Masayoshi Son, and also the OpenAI chief executive Sam Altman.
But to announce the largest AI infrastructure project by far in history, and it's all taking place right here in America.
Last month, I came to celebrate your winning and promised that we will invest $100 billion. And you told me, oh, Masa, go for 200. Yeah. Now I came back with 500. Because this is the, as you said yesterday, this is the beginning of golden age of America.
But look, it is important to note that Trump's main tech bro, Elon Musk, who ironically helped found OpenAI and ChatGPT, poured cold water on this project to an extent. Musk's openly hostile towards OpenAI's boss, Sam Altman, and he's cast doubt on these companies' ability to raise the $500 billion for the Stargate project. But look, projects such as these do show the challenge and potential of artificial intelligence. And Australia right now has a choice. Do we import the knowledge from the global tech giants, think Google, Amazon, Meta, Microsoft or OpenAI? Or do we seek to do this ourselves? The answer could make a significant difference into how much value Australia takes from what some call the next leg of the Industrial Revolution. Well, Professor Anton van den Hengel is the founding director of the Australian Institute for Machine Learning, Australia's biggest machine learning research group. It's part of the University of Adelaide, and he joins me now. Anton, many thanks for your time. Let's go to this, because it goes to Australia's sovereign capability as to whether we import this technology or whether we try and do it here in Australia. But we can't surely raise $500 billion if even the US is struggling to do it.
Yeah, indeed. This is a critical point in our development, not only kind of technologically, but also in terms of where our economy is going to go. And although it looks like we have a choice, we don't really. We have to make this leap towards a modern economy. The decision, though, isn't to go and find $500 billion. The decision is only to find our path up the mountain. We are, through AUKUS, very tightly engaged with the US. We don't need to replicate what they're already doing. We just need to partner with them and make sure that we progress along with them. So, there's enough space in the sun for everybody, and Australia has very good capability in this space. We can build on it, and we can do it. We just need to invest at a scale commensurate with some of the other nations around us that have already taken the leap.
So I've already just done a bit of research, and Australia now has 308 data centres and growing very rapidly. In fact, there's a new arrangement with Microsoft, which is committed to spend $5 billion on data centres over the next 2 years. But the question is, to go to this truly generative artificial intelligence, this new leg of this industrial revolution, you really need even many more again, don't you?
Yeah, we need more data centres, but we also need those data centres to be running Australian AI. So it's fantastic that we're getting investment into the raw capacity, but what we're missing is the investment in building our own sovereign AI capability. So it's one thing to build the data centres that Microsoft can run their models on. It's an entirely different thing to build our own skills, our own models, and therefore our own businesses on top of that capability.
So you've been working in this area for such a long time. You've always seen the potential of machine learning, of the artificial intelligence. But the fact is that it's not just the build which is massive, and that's enormous, but it's what comes from that build. It's the businesses, the ideas, the breakthroughs that come from that. That's where any economy and a country such as Australia can't miss out.
Exactly. So we've lived through a time when Google and Facebook and Uber have come in and taken over big parts of Australian industries. And yet somehow we seem to be ignoring the fact that we're now sending a lot of our advertising spend and a lot of our transport spend overseas. We can't continue to have big bits of our economy taken over by foreign multinationals. We have to get in there and participate in this modern economy. You can't make it illegal, right? Uber was illegal when they started here. and it didn't make any difference. They just paid the fines. All of this stuff happens on the internet, and the internet is pretty much a free-for-all. The only way that you can push back, the only way that you can control your own destiny is to engage with this technology and develop those businesses in Australia.
So who are the most likely organisations that have the pockets deep enough to be able to develop this? I mean, quite clearly, you look at our list of top companies in Australia and they're banks and mining companies broadly. Are there any that you believe have that capability to do so here in Australia?
Yeah, so the Commonwealth Bank have recently invested here at the Australian Institute for Machine Learning, and they're doing very well. They've got very strong capability. I see that Telstra have just announced $600 million, but they're unfortunately going to Accenture, which isn't necessarily going into Australian capability. We're a rich country. We have the capacity. We've got massive mining companies, massive agricultural assets. We can afford to do this. We're a rich country. We just have to decide that it's a priority.
But is one of the real issues here that executives at companies who are struggling to get their heads around this will simply see this as a labour-saving device, as compared with seeing it as a device which generates new business opportunities, things that we can't even understand yet. I mean, you're talking about breakthroughs in medical science, but there's so many other breakthroughs that it could actually take if you take that sovereign ownership of the business.
Yeah, absolutely. It's important that we go around and improve our efficiency because we're in a productivity slump as a nation. So we need to go and do the easy things with AI to improve productivity. But as you say, the big opportunity is to develop new businesses, entirely new businesses that didn't exist before, and sell those services overseas. And we're a customer for those businesses right now. And we have a few good examples, right? Atlassian and Canva are doing a fantastic job. There's a few others. We can do it from here. We just need to choose to make our focus external rather than internal, and to build the skills as much as anything. It's both the technical and the commercial skills required to identify and then capture these huge advantages. There's a gold rush going on, but unfortunately we're largely missing out as a nation.
Okay, so Anton, you heard there Donald Trump saying in that introduction about the emergency powers that he's creating to create the energy, where you can see that even mini reactors, nuclear reactors, will be put alongside some of these data centres to provide the electricity that's required. And because generative AI uses many thousands of times the electricity than a basic Google search, this is where people have got to recognise that this decision about artificial intelligence is parallel with the decision about energy policy as well.
Yeah, absolutely. And, one of the opportunities for Australia is that we have such an incredible abundance of green power that we can become a world leader in green-powered AI. We can build data centres near the power sources, near the solar arrays, near the wind farms, and become a global provider of this kind of technology at a point in the daily cycle that is independent of all the rest. So when the sun is shining in Australia and we have all of this excess power, we can turn that into information processing capability, turn it into AI, and then sell that AI power overseas. We're really well placed to do this. Interesting that Donald Trump sees that the US has an emergency, that they're responding to a dire need to transform their economy, when they are 10 years ahead of us. We also have an emergency. We need to transform our economy. We're very well placed to do it. We just have to take the first step.
It's going to be fascinating, and there's no doubt that that is a key message to politicians and to business leaders right here in Australia. Professor Anton van den Hengel, the founding director of the Australian Institute for Machine Learning, who's been at this, I've got to say, for decades. Anton, finally, your day in the sun, as it were, has come about as well. Yeah,
it's a great time to be in AI. And, we have fantastic skills here. We have the capacity to be a global leader, largely because of our people. These are the jobs of the future. And, let's hope that we can actually make the transition.
Indeed. Anton, many thanks for your time.
Thank you.
Well, look, as we've been saying, any country that goes deeply into artificial intelligence needs, in fact, just has to have lots and lots of cheap energy, gigawatts of it. And large transmission lines are needed as well to get power to the server stacks. But that's where a bit of Australian ingenuity just might come in. The Nasdaq-listed IREN Energy was started by two Australian brothers, Dan and Will Roberts. They've found a niche in exactly this space. They build data centres in the US and Canada, which are now used to mine for Bitcoin and also to power those artificial intelligence computer chips. What they rely on is cheap renewable energy, exactly what we've just been talking about, which in America is easier to come by than you might think. Ed Boyd caught up with Dan Roberts earlier this week, who was pretty pumped up about Donald Trump and his victory.
Clearly he's pro-Bitcoin, pro-AI, so there's some pretty good tailwinds coming through on that front. I think we saw this morning the announcement of $500 billion of investment into AI data centres in the United States, so it's exciting times.
Yeah, might that mean for you guys? A really big focus from the president on building data centres. How's that going to affect you?
Yeah, look, ultimately we've got a large quantity of power, so there's a big thematic around the scarcity of power and land for these new data centre use cases. So we're not talking about micro data centres that have defined the landscape over the last decade or two. We're talking about power dense data centres, number crunching, data processing, whether it's the algorithm securing the Bitcoin network, whether it's running AI inference or training. And those facilities require an absolute large amount of power, and we're uniquely positioned in that regard.
Why are you so uniquely positioned?
We've got a big portfolio, a really big portfolio. So 6.5 years ago, Will and I established IREN, and it was on the premise that the real world can't keep pace with the digital world. So the digital world, you've got all these exponential demand drivers. And as humanity, we kind of stepped back and said, 10 to 20 years, we're going online. And during our seed investor raising, we quoted movies like The Matrix and Ready Player One. And yeah, like it's a chuckle. Yeah. But directionally, we're heading that way, right? We're going online, we're going into the cloud. And what that requires is just enormous amounts of power. So we saw that, bootstrap a data center business, focused on power-dense computing with Bitcoin mining, and start layering in higher and better value use cases as they emerge over time. So sitting here today, we've got the benefit of 6.5, 7 years of investment in development of these sites, where you can't click your fingers and plug a computer into a high voltage transmission line. It doesn't work. They're really big, they're really high, they're really tall. Yeah. The voltage is different. There's a lot of different reasons. So it takes anywhere from 3 to 8 years to go through the development process to actually step down that power to a usable voltage for computers, and that's what we've been doing for that period of time.
And why the focus on renewable energy?
Look, we just think the world's going that way. There's a couple of objectives. One is the cheapest form of power is marginal cost renewables. There's no feedstock, there's no input, there's no coal, there's no gas, so there's no commodity you need to buy. And the best thing about these data centres is we go to the source of low-cost excess renewables. So in West Texas, where we've got 2 gigawatts of capacity, Australia's total annual energy consumption is about 20 gigawatts, so that gives you an idea of the size and scale. In West Texas, there's about 40 gigawatts of wind and solar, 40. Wow. Transmission line to export those renewables down to Dallas, Houston, and these demand centres is 12 gigawatts. 40 doesn't go into 12. So we go to the source of all that excess renewables, monetize it into Bitcoin, monetize it into AI workloads, and obviously benefit financially in the process.
I know you've got facilities in Canada. Trump has already said he wants to put tariffs of 25% on Canadian goods from the 1st of February. Is that going to affect you in any way? You're trying to figure that out at the moment.
Yeah, look, we're working through it all. Ultimately, when we're servicing the Bitcoin network is globally.
Yeah.
We run the computers, we receive payment in Bitcoin, which we sell every day. Great business. So as far as it goes, selling AI compute from Canada into the US, that's obviously a watch-in brief. We've got to work through it.
Yeah, just take us back to 6.5 years ago. What gave you the idea to get interested in Bitcoin and start this company?
Yeah, so it was multifaceted. I guess our backgrounds were in infrastructure, energy, commodities. We went down the Bitcoin rabbit hole in 2017. Gold 2.0. It's better at being gold than gold is. Scarcer, more divisible, easier to transfer, easier to divide. All the attributes that give gold Bitcoin's objectively better at, except for a track record.
And a price fluctuation as well.
Yeah, but like, how do you go from a cent 14 years ago in value to $2 trillion today without volatility? So it's done a lot of that hard work now, and back then it was obviously a little bit riskier and you had to have the vision doing it. So we were very happy to have an exposure to Bitcoin. But then the bigger picture was this digitisation thematic. Humanity's going online. The amount of power we're going to need for compute was going to be extreme. So locking up all this scarce land power, getting a head start on these really lengthy development timeframes, bootstrapping the business with Bitcoin mining, and then the ability to bring in AI, machine learning, other use cases over time was always the objective. I mean, 4 or 5 years ago, we signed an MOU with Dell at that point to start bringing out non-Bitcoin workloads to our data centers. But it was too small, too hard, so we put it on ice to stay focused on Bitcoin. So sitting here today, people often ask, 3 years' time, are you going to be Bitcoin or AI? I don't know. We've got exposure to two of the most defining exponential trends over the next decade. I don't know which one we're going to do. Which one's going to go first? Which one's going to go further? Which one's going to be more profitable? We've got the ability to toggle between based on where the market goes.
Yeah, that computing power, can you easily move it out of Bitcoin and into AI? Is it easy to do that?
Same data centre, absolutely.
Same place?
Yep. In Canada, we have racks of Bitcoin mining ASICs securing the Bitcoin network, right next to latest generation NVIDIA GPUs providing AI training models to clients.
And just explain to our viewers the profit margins you can make mining Bitcoin with the scale of the facilities that you've got.
Yeah, we're obviously in a good spot there where cost of production all in is around 30,000 US a coin. Obviously with a market price at 100,000, there's a good margin there. On the AI side, we're seeing gross margins on the hardware well in excess of 95%.
Gary Gensler is leaving the SEC under the new Trump administration. He's putting in someone that will be pro-Bitcoin and pro-crypto. New regulations obviously coming in the next 12 months. I mean, are you positive about the future?
Look, I'm always positive about the future. We're founders. It's our job. But so far as Bitcoin goes, look, Bitcoin's a commodity. There's only 21 million. You can't stop it. You can't kill it. It's going to continue to accrue value, whether people want to regulate it or not. Everything else in crypto, we have nothing to do with. I have no view on that. Bitcoin is a commodity. And even when it comes to Bitcoin, we don't hold it. We don't hold it on our balance sheet. The moment we receive it as a reward for securing the network, we sell it. We're a cash flow business. We've got an infrastructure background. It's a real asset monetization process.
I saw a story suggesting you might think about paying dividends in Bitcoin. That was last year. Is that still potentially on the cards?
Look, potentially. At the end of the day, we're receiving a large number of Bitcoin every day. If investors would like to receive some of those Bitcoin as distributions, then absolutely, it's something we can look at in due course.
You put out a market update investing $1 billion into upgrading some of your facilities. Just talk us through it.
Yeah, that was only a few hours ago. So look, it's hot off the press. It's fresh. It's exciting. NVIDIA's GPU roadmap has very much pivoted from air-cooled GPUs to liquid-cooled GPUs with the release of Blackwells. The world has a scarcity of liquid-cooled data centres. As I mentioned earlier, these micro data centres that have historically populated the landscape around capital cities, they only use 50 megawatts, 100, 200 megawatts. A, they don't have enough power to keep up with the needs of this industry. B, they haven't got the expertise and experience in managing power-dense computing, let alone liquid-cooled. So the opportunity for us is to overlay installation of liquid-cooled facilities in our existing data centres and service a market that seems to be growing quite rapidly.
Dan Roberts, Co-Chief Executive of IREN Energy. Thanks so much for your time.
Thanks, Ed.
So artificial intelligence is the enormous opportunity for Australia and also the world. But as I said earlier, there is a rub to this, and that is Australia has to keep sweet for the president, well, certainly for the next 4 years. Trump's America First trade policy will include punitive tariffs against, it seems, Mexico, Canada, China and Europe. The aim is to get more things made in America and to export more goods to these countries. But the America First trade policy also has another nasty hook in it that could potentially affect Australia. In it, there's a reference to a retaliatory provision of US tax law that's never been used before. It gives the president the powers to hit extra taxes with any country that also, therefore, has American companies in it. Now, he doesn't have to go to Congress to do this. He can simply double the tax rate imposed on the US income of foreign companies and individuals whose laws are found to discriminate against US citizens or companies. Now, here in Australia, think the companies that operate in America, like BlueScope Steel, Amcor, Brickworks, Orica, Visy, Woodside, CSL, ResMed, Cochlear and James Hardie, and that's just for starters. They all have big and growing American operations. So watching the implications of that executive order this week is the Arnold Block Liebler tax partner, Sean Cartoon, who joins me now from Melbourne. Sean, always good to have a chat to you about these things. There's two ways, isn't it?
Hi, Ross, great to be on.
A lot of these companies have gone to America basically because they can see great opportunity. Lower taxes, cheaper energy prices, bigger markets. It makes sense for them to be there. They would be a little concerned if all of a sudden, as a result of the way in which we tax American companies here, they find their taxes there doubled by Donald Trump.
That's absolutely right, Ross. And look, this power that was included in an America First trade policy document that was released a couple of days ago, it's a power that is stated to be exercised by the president alone. And I understand it's never been exercised before, so it would be unprecedented in its use, but it would have Australian companies operating in the US worried, I would have thought.
OK, but then there's the other aspect of this, and that is more Australian companies you think are likely to head to America because of the growth in artificial intelligence there, because of the cheap energy, and because of what Donald Trump is promising is lower taxes.
That's right. I think that's right, Ross. The opportunities to do business in America for Australian companies and entrepreneurs for the next 4 years are simply huge, starting with reductions in regulations and with their tax settings. Just overnight, I heard Trump announced that he is looking to cut US taxes further, and it's mooted that he might reduce taxes to 15% in the US, which is half our corporate tax rate here in Australia. So it might well be that Australian businesses look to ramp up their operations in the US to take advantage of both the unprecedented low tax rates and also the very favourable business conditions over there.
All right, this is all about competition, quite clearly. We don't live alone in the world. And if the American tax rates and the American energy prices are much more competitive than what they are here in Australia, then Australian companies, particularly large companies that can be multinational companies like some of those I mentioned, they're completely nuts if they don't spend more of their shareholders' money in America and less of it here in Australia. It's not a good thing for Australia to have that capital leaving this country.
Yeah, I agree with that. And we have very sensible tax rules in Australia that say that if a corporate group is carrying on an active business in the US and generating US sourced income that's taxed in the US, then Australian corporate groups can generally bring that back to Australia without suffering top-up tax here in Australia. And that makes sense because our tax laws should not be a disincentive for Australian companies to grow and compete on the global stage.
OK, but then the sting in the tail, as I've said earlier, is what happens here with Australian policy. Now, if you consider two factors, one is the move which Donald Trump pulled out of this week to effectively have a universal minimum rate of tax for multinational companies, right? Now, that was actually partly engineered by Australia. We pushed that very aggressively to get the likes of the Googles and the Microsoft to pay a reasonable rate of tax here in Australia and not to transfer it overseas. The second one is that news bargaining code that I mentioned, and that quite clearly is directly aimed at those tech companies to pay local publishers and media companies, including News Corporation that we work for, to basically pay for their news. Now, Donald Trump might very well see that as being a genuine disincentive for those companies and therefore chase after Australia. You just don't know which way he'll go.
I think that's right, Ross. Both of those measures that you mentioned, the Pillar 2 reforms were enacted just in December last year, and the additional charge that was announced in conjunction with the media bargaining laws, that was also announced in December last year. So a lot remains to play out as to how and whether we actually proceed to implement those measures in light of how aggressive the Americans are coming out of the gates with the new Trump presidency.
Well, what's known is that, say, for example, Mark Zuckerberg at Meta, he's very much aware of the Australian situation. After all, it was Mark Zuckerberg who suddenly pulled out of that news bargaining code, which the government then decided to turn into a mandatory code to force them to pay. So there's no doubt if he's got the president's ear, the president's going to know all about Australia's behaviour in terms of that, but then no doubt also in regards to try and create this minimum rate of tax for multinational companies. So, there's no way known that it's going to escape Trump's attention.
Look, it'll need to be managed very, very carefully by the government, and I'm sure it will. But the bigger Trump vibe shift that I'm seeing is really a return to genuine competition between sovereign nations. And I think below the surface, as Australia, we really need to be thinking about how we are going to compete to increase our own productivity. And do we have the right policy and tax settings in place to achieve that? And if we don't, I think we will need to move really fast to ensure that we can continue to have the best companies and opportunities here in Australia, because one thing's for sure, we are in an intense competition now, and arguably we always have been. But I think we really need to focus on what we're doing over here in Australia from a productivity point of view, and I think that's the bigger issue that we need to be focusing on.
It'll be fascinating to see exactly whether the government is prepared to give up company tax revenue in particular, because remember, it cut the tax rates for small business, but politically didn't feel strong enough to be able to cut the tax rates for big business. So is that something they've got to look at as well?
Look, I hope so. Our corporate tax rate of 30% is up there in the world as one of the highest rates, but it's much more than just and complicated than just reducing a single rate. Really, everything should be on the table now. The Tax Institute released a great report a couple of years ago, The Case for Change, which is a holistic look at the Australian tax system. And sure, the corporate rate of tax should be in the mix. And I would argue it should come down, but that needs to happen in conjunction with a complete holistic root and branch look at our tax system, so that the government continues to be able to collect the taxes it needs to provide the services that we as Australians clearly also want. So there's a delicate balancing act there. But at the moment, I would argue that we are just adrift in the breeze, where there's a lot happening around us, and we need to take tax reform more seriously than ever.
Sean Cartoon, the Arnold Block Liebler tax partner, I appreciate your time on the program today.
Thanks, Ross.
Well, coming up after the break, we're going to continue with our conversation about the future of Australia's casino operator, The Star, which just simply right now hangs by a thread. We investigate what happens, especially to New South Wales and Queensland governments, if it falls over. It's great to have your company here on Business Weekend. Well, at its peak, the casino operator, The Star, was valued by the stock market at more than $4 billion. But that seems to be a long time ago, because on Friday, it was worth less than $300 million. The company this week admitted to the ASX that its future is not assured. It needs funds urgently. But if it fails in getting that funding, there will be implications for state governments as well, which gain lucrative taxes and tourism dollars from these casinos. Angus Hewitt is an analyst with Morningstar who covers the casino sector and joins me now. Angus, always good to chat to you about this. I mean, just tell me, what do you think the chances are of the Star being able to pull through this?
Yeah, it's really uncertain. There is a chance Star falls into administration, but there is also a path out of this. We're currently modelling a 50% chance. I'm not behind the wall here. I'm not privy to what's going on internally, but if you just look at the numbers, Star burned through more than $100 million in the last quarter and has less than $80 million in available cash. The casino obviously can't continue at this rate, and something's got to give. We think Star's going to need a lifeline.
Okay, so what we know already is that the business is effectively sort of in a safe harbour situation where it can't really be attacked by small creditors, as it were. But as you point out, it's the big creditors. It's those who have to put in additional funds to keep it going. They've got to make the decision, because it would seem right now with the cash flows that it probably is outside of the covenants that it needs to actually continue as an ongoing viable organisation.
Yeah. Conditions are really weak. And look, Star does have another $100 million facility, but they do have to fulfill a number of conditions to access it. And a big part of this is, maybe the big one is, they have to raise an extra $150 million, probably in equity. Current shareholders going to want to chip in. They've been burned twice, right? Star raised $1.5 billion in 2023. It's not that long ago. First at $1.20 per share, and then at 60 cents per share. So does this come down to private equity? Does it come down to asset sales? Star's assets undoubtedly have value. The question is whether it can be realised in time.
Well, there's your big problem, because the debts are mounting. Even the $3 billion that it's spent to create that Queen's Wharf development in Brisbane now is mainly out of debt. And as we say, the value of the business is just $300 million versus the debt even on that project alone. So, as you say, this is a fundamental mismatch of assets and cash flow, isn't it?
It is, yeah. And I mean, I touched on the operational conditions that's really wreaking havoc on Star at the moment. Weak consumer sentiment, mandatory carded play which pubs and clubs don't have, and VIP gaming permanently impaired. All this is weighing on the revenue line. And then on the cost side, Star still has to prove suitability to regain its licenses in New South Wales and Queensland. And with that comes sharply higher compliance, transformation costs. So if you take a look at how the landscape for casinos has shifted over the last few years, they're probably never going to be the lucrative businesses they once were. But we do expect a medium-term recovery in operating conditions. We think it's unlikely Star can trade itself out of this predicament at the moment and needs an immediate solution, but we think if it can, we do expect a medium-term recovery in operating conditions.
Okay, I just want to ask you about one thing, because quite clearly this is all about the attitude of the state governments that govern the Star, that is in New South Wales and in Queensland. Now, quite clearly its own behaviour in terms of the money laundering stuff and the allegations that came through royal commissions and so forth, that goes back to the business itself. But the state governments gain significant revenue from casino operations. So if it goes into some form of administration or founders in some way, then they also lose the gaming revenues. So it's not necessarily a good thing for state governments either, which are also cash-strapped.
Yeah, and that's before thinking about the fines that are outstanding, right? I'm not sure where they stand on the hierarchy of who gets paid ahead of lenders. Look, higher levies, carded play, the general regulatory uptick on casinos, and a lift on compliance and legal spending in general. All of this is clearly a factor in why Star is where it is. But you could argue, and you did argue, that the trigger for all that regulatory uptick was Star's behaviour itself, with failings in anti-money laundering, gambler harm minimisation, and all this was highlighted during inquiries. Look, state governments probably could save Star. Regulatory burdens like mandatory carded play is having a massive effect on revenue. And a lot of this is due to the fact that substitute venues like pubs and clubs, they don't have the same requirements. So they're losing share to pubs and clubs. Delaying payment of taxis or levies, that buys Star time, and Star needs time. But whether or not that's a good use of taxpayer money, that's not my call to make.
That's right. And there's one other fundamental part of Star, as it was previously with Crown, although it's in a totally different situation now, and that is if the Star owns its properties, even if it were to go broke, either the administrator or the current management at some stage would have to negotiate with a new licensee or a new casino operator to be able to use those premises. So that's where it gets really murky, doesn't it?
Yeah, it does get messy. If Star doesn't get a lifeline, there is a decent chance it falls into administration. In this scenario, shareholders are probably going to get wiped out. But I would think that once it is in the hands of administrators, the properties would probably stay open, at least in the near term. Beyond that would remain to be seen. Effectively, it would be up to the new owners and lenders to recoup any losses. But Star's assets still have value, not just as the properties themselves, but we think even as casinos. Yes, they'll probably never be as profitable as they used to be, but we still expect operating conditions to recover from where they are.
I'll tell you what, it's going to be fascinating to see exactly how it plays out, because it's going to happen very quickly over the next few months, as you point out, as these cash flows simply don't match up with their requirement for cash right now. Angus Hewitt from Morningstar, I appreciate your time on the program today.
Thanks for having me, Ross.
Well, coming up after the break, we speak to the boss of Australia's original craft brewing company and find out why he's decided to step down after 23 years. Thanks so much for being with us here on Business Weekend. Well, the history of the Coopers Brewing Company is unique in this country. The Adelaide-based brewer is one of our oldest family-run businesses, now through 5 generations. It's withstood a hostile takeover, beer wars with major brewers like CUB and Lion, trying to crush them over the years, and even recently the emergence of the host of micro and boutique breweries that have sprung up. Well, this week, the chief executive of Coopers, Tim Cooper, decided to hand over the reins of the business, but look, importantly, he'll remain with his passion as the chief brewer, and he joins me from Adelaide. Tim, always good to catch up with you. Why have you hung up the boots?
Ross, I'm in my 69th year, so I turned 69 in June. It could have come a little earlier, but we were busy building our new visitor centre at Regency Park, a $70 million project, and I committed to my fellow directors that I'd stay on as managing director until we saw the end of that project. So we opened that to the public in August last year.
So if you don't mind me saying, I reckon that Coopers is Australia's, sort of unique and individual boutique brewer. It's always been renowned for the quality of its product and for the fact that it doesn't manufacture in bulk like many other brewers do. But you've got so many other micro breweries suddenly springing up, so literally out of the suburbs. Is it a challenge for a brewer such as Coopers?
I think we've been fortunate, Ross, because we've ridden the wave of the craft revolution. So the craft revolution really has gone on for the last 20 years. So as you know, hundreds and hundreds of craft breweries have sprung up over that time. And I think, if anything, they have created a greater interest in the beer category, and that's helped us along in the process. We've also been described as being the grandfather of craft because, of course, we're 163 years this year, so we've been around for a long time, and our products, as you implied, certainly give the impression of being craft and certainly craft-like, but not so much small batch. Our fermenters are quite large now. We can ferment about 200,000 litre batches at a time, so which is on the larger size. But on the overall, we feel that it's been beneficial. We've seen a lot of growth in the industry with the craft players, and we think that it's helped us along in the process.
And it's really interesting because overall beer consumption is falling, and yet Coopers continues to grow. Now, that obviously is against where the market sits right now, which therefore implies that it's the big brewers, it's the CUBs, it's the Lions that are dropping market share right now. Is that your own sense? And what do you think? Is it really a move away from their traditional products to the more crafty style products?
It certainly has been over the last period of time. The growth in craft is probably plateaued now, but we've fortunately been growing against that decline in volume. The decline in volume really is across the whole industry. So we're seeing a decline in the MAT of about 4% or a bit over 4%, and yet we're up 3.5%. So, which is very pleasing to be able to report. But it's certainly over the period of the 20-year period, craft really grew from 1% of the national beer volume to more than 5%. So, and then if you add us on top, and we're 5%, then it adds up to more than 10%. So. That's the summary of it, and there are some smaller players, other like the supermarkets and other players who add up the rest. So the two majors make up about 85%.
Just one other aspect of it. Now, we mentioned the business, 5 generations, and indeed the history going back 163 years. How does a company, a family business like yours, stay together for so long? I mean, ultimately there are so many mouths to feed, so many mouths that have got to be looked after. How does it actually hold it together over that time?
Well, we've got a good constitution, which really helped us out during the Lion-Nathan battle in 2005. So the shares can only be traded preemptively, so we have preemptive rights. So anyone wanting to sell their shares, and that doesn't happen very often, but if they do, they need to sell to existing shareholders. So the strength of the Constitution really has helped maintain the company. We have 2 halves of the family, so the A and the B side, and that also has helped in terms of diversity, but also in terms of allowing for a good interaction between effectively what is 4 sides of the family, so dating back to the 3rd generation of the business.
So I know you're stepping down as the chief executive, but you stay on as the chief brewer. Is that a case where you know you're pretty good at brewing the beer, so you might as well keep on doing it?
Well, Ross, that's generous to put. I enjoy beer is in my blood, and certainly I've always enjoyed doing it since I joined the company in 1990. I was on the technical side of the business for 12 years before I became managing director, and it gives me the opportunity to help our brewing team and the technical side of the business. Michael Shearer, who takes my place, has very much a commercial background, so I'm able to, as long as he wishes it, I'm able to help on the technical side and just add my assistance there. And I continue to enjoy turning up each week to beer tasting. We release the beers through these tasting sessions, which is a tough job, but someone's got to do it. And so twice a week I'll be attending those beer release sessions to make sure that the quality of the beer is as we expect.
Well, I'll tell you, Tim, it's a cracking story. There's no doubt about that. And I thank you so much for telling it to us today, and we really appreciate your time.
Ross, thank you very much for your interest.
There you go. Tim Cooper there. It is a cracking way to end the program. Anyway, that is it for the program this Sunday. Up next is all the latest news right here on Sky News. Business Weekend returns next Sunday, but of course you can keep up to date with all the latest business news with our daily program, Business Now, 4:30 p.m. Eastern Daylight Time. Thanks for your company today. I'm Ross Greenwood. We'll do it again next week.